Hello and welcome to the latest wealthmanagement.com Fast Chat. I'm Dinah Britton, the managing editor of wealthmanagement.com. And today I'm speaking with Lori Keith. She's the director of research and a portfolio manager at Parnassus Investments, an asset manager that specializes in socially responsible investments. And today we're going to discuss a framework for ESG implementation. So Lori, I know, there's marketplace offers over 1,600 sustainable investment options, a lot of options out there. And a lot of news headlines, talk about so-called green funds that have, substantial holdings in carbon polluters. And so I know that that's something called greenwashing. Just wondering if you can explain, what is greenwashing?
Sure. And thank you very much for having me today on the show. What is greenwashing? It's often referred to as green sheen. And what we have found is that many companies see benefits of being seen in a positive light from a sustainability and ESG perspective. Greenwashing can occur when companies, whether it be corporate issuers or asset managers, try to make themselves look more sustainable.
Yeah, that's really important for advisors to know, especially as they're trying to choose these funds for their clients. So how does Parnassus avoid greenwashing?
It's a great question, certainly from the asset manager perspective. Parnassus has really been focused on ESG investing since the founding of our firm in 1984. And so we consider ESG really to be in our DNA and how we approach investing. In addition to our exclusionary screens and our prospectus, we also will exclude companies that have questionable ESG or controversial business practices from our universe. We really focus on deeply embedding that ESG into our investment process. And simply put, we not only look at the company's fundamental business process, such as the competitive moat, the relevancy of the products and services, the management, but we also evaluate material ESG factors to make a holistic assessment of the company. We use our internal sector frameworks across each of the 10 sectors within the Russell to evaluate how well are companies mitigating their material and reputational ESG risks.
That's great. Thanks so much. And what are some of the biggest ESG risks that investors need to consider before buying an ESG fund?
We look broadly across all major industry sectors. I'd highlight a few key risks that we're seeing. First, I'd point out one of the key risks that we're seeing across many corporate issuers is due to the scarcity of talent. Secondly, I would say climate change. Extreme weather events are presenting systemic risk across many industries.
Thank you so much. And what are the most important considerations investors should take into account when evaluating ESG funds?
I would highlight a few areas that I think investors should really consider and scrutinize. First, investors should really understand what is the asset manager's approach to ESG and how is ESG integrated in the investment process. Secondly, I would say it's important to look under the hood and really evaluate the asset manager's investments. Are they aligned with the investment mandate and prospectus? I would say investors should really pay attention to whether their fund managers are using their seat at the table with their holdings to drive positive ESG improvements over time. And finally, does the asset manager have a stewardship report to report the impact of their engagement efforts? And do they publish and are they transparent about their voting record on their website? I'd also point to Morningstar as a great third-party resources that investors can use to evaluate each fund manager's ESG strategy.
Those are some great points, Lori. Well, that's all the time we have today. But this has been a great discussion with Lori Keith from Parnassus. And thank you so much for listening to this wealthmanagement.com Fast Chat.